Gotcha.
All right, welcome everybody to the Bookmap Pro Trader webinar today with Carmine Rosato. We've had Carmine multiple times here in the past, and today he's going to go over his best order flow playbooks. He's been making a lot of content about Bookmap and ways to look for order flow setups. So this should be really great webinar. Next slide, please. So I'll just go through some disclosures and things for you guys. The general disclosure is that, uh, let's see, I can barely read this here. Here we go. Okay. All Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. And the risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. All right, so next slide. And just have a few things to go over with you guys. It is our Black Friday sale here at Bookmap. You can get 50% off Bookmap Global Plus quarterly, plus 50% off data for 3 months. So if you're interested in this, is from November 28th, starting today, till December 31st. All right, so you can use your QR code there and take a screenshot of that, or you just go over to bookmap.com and you'll see it the banner on the home page. All right, so next slide. And then also get verified over here on our Discord channel. It's free, and we have 27,000 traders over here, and many events every day, multiple events, lots of resources, exclusive live webinars, etc. So if you're interested in that, and then the next slide. Okay, and I'm going to let Carmine go through his own introduction here. He doesn't really need one, but Carmine, pleasure to have you back. Take it away.
For sure. Cool. Yeah, so starting in January, it's going to be 10 years that I've been trading for. I mainly use, for those who follow me, I mainly use just price action, supply demand zones, and I combine order flow trading to that. In my previous Bookmap webinars, which if you are new to Bookmap, I would definitely really recommend watching my previous webinars that I did on their YouTube, kind of understanding some of the basics of the markets auction and kind of understanding everything that I look for on the platform. In this webinar, I'm kind of going to be going over some specific playbooks, but I think it's very important to go back to the previous webinars as well, maybe after this, because there's some important tips and lessons that I've structured in there. Kind of understanding, and I'll just briefly get into it now. Like the way I trade is mainly I look for levels of interest, and then I use order flow tools such as Bookmap to confirm price action around my levels of interest for where I look to take trades, and you're going to see a lot of that in this webinar. So I think we're good to go, right, Bruce?
Yeah, we are good to go.
Okay. So, first thing I want to go over, I'm sure for those who have been following me on my YouTube, I'm sure for those who are in the invested trade community, and for those who are new, a big component to some of my strategy and how I navigate the markets, especially one of the playbooks, is revolving around low volume nodes. And just a simple little 4-step process I'll first get into. I'll highlight the market structure of this, and then we'll get into some actual trading examples. For this strategy, low volume nodes, the first thing that I look for, and this is not a necessity in this strategy, this is definitely a little bit of an added benefit. Point number one, again, not a necessity, but definitely gives it a little more substance and a little more confluence. So the first thing that I like seeing when using this specific playbook, and we're going to get into about 3 or 4 different playbooks in this webinar. This is just going to be the first one. The first thing that I like looking for in this playbook is either the market rallying or selling off from a level of resistance or a level of demand, right? So both the buy and the sell side, what I like seeing is either the market moving up from a level of support, bouncing off of it, or selling off from a level of resistance or supply. Now, why this is important is because this step number one, again, not a necessity, just giving it a little more substance. It validates that strong buyers or strong sellers are present in the market before, let's just call it, a low volume node forms. So in this example, let's say we had this level of demand right here. The market does rally out of this level of demand. Why this is significant for me is because the bounce out of the level of demand validates that number one, buyers are present in the market. And flip it to the sell side, if the market sells off from a level of supply, it validates that sellers are willing to sell at, let's just say, higher prices, and they bring the market down much lower. Now on this, let me just get a good drawing out here. I was never good in arts and crafts. I'm a terrible drawer. But let's say we have the market rallying off this level of demand. On this rally, it then forms some significant buying volume, whether it's a delta outlier, and you're going to see some of these concepts if they may confuse you in these lessons, whether it's a rebid, reoffer, whether it's a large passive buyer, large seller, or any type of absorption. The reason why we want this is, number one, we see the buyers at their level of interest. Number two, we then identify the strong buying or selling volume, validating the market moving out of that range. And let's just say that maybe there was a large passive buyer lifting the market up over here. Step number three would then be looking for levels of low volume, which could be seen on a volume profile. The reason for this is because when the market then does lift up or sell off, the reason why a low volume node forms is because of how aggressive the volume was in that direction, giving the market not much time spent there, and most importantly, not much volume transacted there. So the reason why low volume nodes form, or even why I look at them, is for the sole reason of it just indicates that really large aggressive participants are present in the market. And then I'll look for a retest, and that's my step number four, is waiting for a pullback into this range, where then I gauge with the order flow, especially on Bookmap, which you're going to see here, if the buyers that transacted here on this low volume node, and if the buyers that transacted here on this level of demand are willing to buy here at this low volume node, and this is the area that I'm looking to transact on, indicating that those large buyers or those large sellers are willing to defend these prices, buy at lower prices with an agenda to move the market up. And the reason why I love this, and again, the reason why I love using like tools like Bookmap, is because not a lot of this information could be seen on a candlestick chart. I find some of my best setups are things that just cannot be seen from a candle chart, and the things that are seen through the order flow and being able to read volume and how it has an effect on the market is more significant for me. So this first setup I want to go over was...
Sorry, Carmine. Could you quickly increase the volume on your OBS? If you just head to OBS and then select your microphone, hit the three dots, and then increase whatever decibel volume you've got. If you can set it to 200% or even 400%, that would be ideal, please.
For sure. Let's increase the volume. Let's go. All right, I just raised it up 10 decibels. Is it better or worse?
It should be much better. I'll double check and interrupt.
Right. 20 decibels. All right, so it might be too much now, but okay. First setup, Friday, October 31st. This was about a month ago. The main thing that forms here is that we're going to see this level of interest, which I'm going to show you is the low volume node at this range. And the good thing about using order flow is that, for me, it offers great risk to reward ratios. Getting in when the order flow confirms the setup and getting in as soon as we spot the buying or selling volume, this will then offer a better high quality opportunity where, our risk is super small and the reward is super high. So let's first go over step number one on this playbook. And again, not a necessity, but the market rallying from a demand or support level. So step number one here is we'll first go over the pre-market plan just to get context and understand the levels that developed here. So the main thing that I was watching for this day was if the market can break and hold above 69.06 and 69.10. If it could break above this range right here, which is a previous day's passive seller sitting up here. If it could get above this passive seller, then I would flip my bias and look for longs targeting an upper level of resistance or supply. Now, the market in the overnight session tried breaking above this 69.10, 69.06 level and failed to do so. So this indicates that sellers are now present above this level of resistance, especially breaking above the previous day high and failing to maintain buying strength above an existing level where a seller was passive from the day before. So this failed attempt or this failed breakout gave me context that says this looks like a failed breakout. The selling so far has been super strong, and right now where my focus was once for longs is now shifting towards a failed breakout scenario. And in failed breakout scenarios, my focus then goes to shorting pops and using downside levels as targets rather than initiating long positions off of. So just simply, step number one of the low volume node strategy is that this market failed to break out above a level of resistance where if it did break out above it, it should have had, I don't want to say an easy move, but it should have had with ease to rally up into this level of supply. But the fact the market failed to break out indicated weakness and context. That's step number one, is that sellers or buyers are present at a key level of resistance, supply, demand, or support. Now, step number two is we're going to see where aggressive delta outliers are. But first, this is kind of where my then plan shifts. My plan intraday shifted towards shorting 68.93 to 68.98. That as long as the market remains under this, I want to short pops targeting downside levels. So ideally, once the market sold off, we formed this new level of interest where then I want to short pops into this where sellers could appear, playing short, looking to capitalize on a downside move. Now, step number two of the low volume node strategy is finding any significant selling or buying volume that these buyers or sellers essentially leave their trail where then we can follow their footsteps. So step number two is on this sell-off. This is the 9:30 US Open here. The market sells off and we see big sell bubbles on Bookmap, which just indicates larger volume prints hitting the bid side, or in other terms, just larger aggressive sellers. And we can even validate this with volume by time. So this significant large selling bubble aligning with this previous large selling bubble and even this one indicates that large selling volume is coming into the market, and I call these large delta outliers where there's significantly more selling than there is buying at a specific level. That's step number two now. Step number three, looking at the same chart. Why then low volume nodes form, again going back to the main structure and the concept of low volume nodes, is they form because of how aggressive and violent the sellers or the buyers are. In this context, it was sellers because the market, moved down. Because of how violent they are, the market did not spend much time there and it did not build much volume, making the market move down with ease, which then we form what I call a low volume node. And we could even highlight that here around 68.89, call it, to about 68.92. This area right here is just significantly lower volume if we were just to look at the structure of the volume profile for the session so far. And something that I do want to highlight here is that I do reset my session volume profile at the New York Open. So as soon as the 9:30 bell rings, Bookmap does it automatically, but I like looking at the volume profile from the New York Stock Open and on. So here we can see that clear low volume node, 68.89 to call it like 68.92. And then what I did was I just combined it with this delta outlier up here, this delta outlier up here, giving me a level, call it 68.89 to about 68.93. And this is kind of where this level came from, and I drew it to the top of this little consolidation range, and we're going to call this market structure supply, which you'll see in the next few slides here. So ideally now, step number four is once we have the low volume node, once we have the aggressive selling volume in our level of interest, once we have the market failing to break out and hitting this level of resistance, I then now look, step number four is for the market to revisit this level of low volume, for then those sellers that originally originated on the morning sell-off to then reappear, defend price, and to resist the market. And here is where I'm looking to capitalize on it, right? Yes, we can capitalize on this downside move here, here, and here, right? But this playbook is a repeatable pattern that when it appears, I know the edge or the advantage is in my favor. That indicates that either buyers or sellers are leaving their footprint and we got to follow their footprint. So here the market rallies back up, step number four. We see larger offers here on the heat map, which just indicates large passive sellers at this level of low volume, combining it with those large delta outliers, low volume node, and then pop into this is where I found enough confirmation to get short at 68.89, putting my stop loss at 68.93 and a half, about 4 points of risk, targeting about a 10 to 13 point reward. So it's about a 3-to-1 or higher risk to reward ratio. And the reason where 68.79 to 68.76 came from was just simply the 79s was the low a day and the 76s was the previous day close. So with all these playbooks and all these strategies you're going to see in this webinar, when I'm entering my setups, I'm looking at where can the market gravitate towards on that next move after it, after I get confirmation. It's not looking at where can the market go by end of day. It's not looking at where the market could go in the next 5 hours. It's all right, I'm seeing sellers appear here at my level of interest. If these sellers are strong, where is the next possible point the market can gravitate towards? For me, the next point would be the low a day, and then the 76ers was just the previous day close. Now, what I'm going to do here is I'm going to pull up Bookmap Replay. And for those who do use Bookmap, in my opinion, one of the best tools that Bookmap offers that not a lot of other order flow platforms do use, and it's kind of one of the tools that always makes me come back to Bookmap, is their replay feature. I can go here, open my data file, and every time that I've had Bookmap open, I have the replay and the recordings up here without me doing anything. So I can go back to any day, any minute, any second and see the exact volume that came in. And this is a very good tool to go back, reverse engineer, replay your trades, see what you did right, see what you did wrong, dissect your information, and reverse engineer specific setups. And it gives me the ability to go back and replay this data so we could see this like we're simulating it in real time. So this is now October 31st at 9:45 a.m. Eastern Time, and we're going to go back and simulate this. I cannot stress how important it is to, and even in my community, I post like all the files just in case anybody misses a day. If you weren't trading, your Bookmap wasn't open, maybe you didn't have Bookmap in the time, I have a library of all the files so people could go back and click any day in case they miss it. But this is just such a good tool. I use it, I don't want to say every day, but I use it many times a week to go back and review all my trades. And I think this is so significant to do because you just learn so much that maybe you didn't pick up in the first time. All right, so what we don't see here is the failed breakout, right? I'll go back to the slides. What we don't see here right now from the candlestick chart is the failed breakout, but keep this in mind because this is step number 1 of the low volume node strategy. Now I'm going to highlight all the other points. Point number 2 is here the market selling off. Here's the 9:30 open. Here's the aggressive sell-off. Here we see the delta outliers as the market's selling off. Again, just those large selling volume dots indicating there was a lot more aggressive selling than there was passive buying, and then the market continues, to move down. On top of that, we also have a level of low volume, call it from, again, those 89s. I marked it all the way up to the high of this little high right here, but we have an area of low volume right where my cursor is, highlighting at. So now the idea here is we have the delta outliers, we have the low volume node. Now I am just waiting for the market to come back into this and see if the sellers who sold on that earlier morning rally and the sellers who sold on that failed breakout attempt in the pre-market session are willing to sell on the pops and get in at much higher prices where they can then look to defend the price. So I'm going to play this here. And again, really good tool here because you could really just simulate this like it was in that exact moment. And I want you all to watch what's going to happen here when the market pops into these 68.90s. You're going to see an offer fill, and I'll try to pause it as soon as we see it. Just bear with me. I don't know the exact time this occurs. Okay, we're going to pop into this range right here. Pause it. Let's go back to about 9:52. Okay, right here. So I want you all to watch this offer. It's not a significant offer. It's only 136 contracts sitting at 68.92 and a quarter. But again, when this in itself is not significant, but when you combine all the substance that I've explained so far and you add the location and you add the context to this, this is just what makes it a lot better. So let's slow this down. And I want you all to watch the pop into this range. Watch the pop into this offer. We're going to pop into it. And right there, some significant buying volume that fails. Now, to me, this is a good sign of whoever was selling the market earlier is now defending these prices and selling at much higher prices. This, to me, is a good enough confirmation to put risk on short, putting my stop loss above the high that I just made there, putting my stop loss wherever it makes sense that it invalidates my trading thesis. For me, it was above this high. Targeting first the low a day into the 79s and then the 76s, which was the previous day close. And then if I just speed this up, what you're going to see here is the aggressive selling come in, right? We want to get in before the aggressive selling comes in. We want to get in before, let's speed it up even more. We want to get in before the market starts moving down, right? Because that's going to offer the better risk to reward ratio. We don't want to get in after the market's already moved in our favor a few amount of points. We want to get the confirmation, add the context, add the location of the setup, and the confirmation of the offer filling, right? Zooming out, we can see this offer fill, resist price, and what this tells me is the aggressive buying tried to lift the market up. It failed to do so. The seller was sitting there passively, defending these prices. Adding the context from earlier, it indicates that these buyers did not have the strength to get us above that seller. The seller resisted the market, and this for me is a great opportunity to act, and capitalize on a reversal and a quick downside move. Again, I want to make this a point that this in itself is not significant, but when you add everything that I've explained so far, it just makes the setup much better when many things align and gives it a lot more substance. And then we will go here. And another thing that I do want to mention is these are all trades that I've taken personally. These are not me just going back and saying, oh, this happened and this happened. If you're in the Invest the Trade community, I post all my trades in there, win or loss. These are trades that I have taken and easily are just off of repeatable trading playbooks that I look for daily. And that's kind of the point of this webinar. And again, this trade was about you can't see it because my face is here. Hold on, let me move that. This trade was a 3.1 R multiple. Okay, next setup, next playbook. We're going to call this market structure demand. So for this playbook, ideally what I like seeing, and I would say kind of the big component to the strategy and how I trade is I either A, want to look for where buyers or sellers are trapped. I want to look for pain points in the market. I want to look for a lot of traders stopping out of a large position. I want to find points where a lot of traders are off sides. Where there is pain, there will be gain. And, as weird as that is to say, where there's pain, there's gain. That's for me where the greatest edge is in the market. So for this market structure demand scenario, what I like seeing is the market dropping to the downside, right? That's step number one. Following step number one, I like seeing then some sort of consolidation. Right? I like seeing then the market stall out. And why this is significant to me is because when the market dropped, it obviously attracted sellers to come into the market, right? Then the market sells off, and then we consolidate. And what I call this is larger positions leveraging into a position, or larger traders leveraging into a trade. And really what I mean by that is for traders to buy, they need others to sell. For larger traders to buy, they need others to sell. That's why you always hear the term like liquidity or stop hunt or, how many times have you stopped out of a trade and then the market moves in your favor after you've exited it for a loss? It's just the market needs to pick up our liquidity. And in order for larger traders to get in a larger, let's just say, buy position, they need other traders to sell. When other traders are selling, other traders then have to buy. There's a buy and sell position order for every transaction. Now, why step number two is important is because point number one, the market dropped. Then all of a sudden, some external force, then I guess you could say, put the brakes on the market and stopped the market from continuing to sell off. The cycle of the market goes like this. It moves from imbalance, which is the drop, to then balance, which is a consolidation, to then imbalance. That's how the market moves. After a directional move, after a trending move, the market then likes going range bound. It does that to pick up liquidity. It does that to find acceptance. It does that to then pick up fair prices for the market's auction to adjust and adapt accordingly. So usually after larger drops or larger rallies, I didn't mean to remove that. After larger drops, in this example, we're going to talk about demand, so we're looking for a drop. Ideally, what then I like looking for is consolidation. And again, the main reason for this is because this consolidation then attracts a lot of traders to sell, thinking the market will then continue moving to the downside. And great, yes, maybe it does continue to go to the downside, right? Sure, maybe it starts moving down and continues, but that's not this playbook. The playbook, which you're going to see the next step, is then waiting for the market to then rally to the upside. Let me redraw this a little bit so it's a little clearer. So sell off, step number 1. Consolidation, step number 2. And then rally, step number 3. And let's break this down. Ready? So sell off down is imbalance. Consolidation is balanced, followed by imbalance to the upside. Why step number 2, followed by then step number 3 is important is because in this red period, this red area of consolidation, a lot of traders then expect continuation down and they start shorting the market or selling it. And what this then does is it then indicates larger traders are leveraging into a position with an agenda then on step number 3 for the market to rally to the upside. Step number 3 is imperative because this validates that whoever is transacting here in this consolidation range then formed demand or then formed an area where they leveraged into a trade. What I mean about leveraging into a position is that let's say a trader needs to buy 1,000 contracts. Maybe they don't buy all 1,000 contracts at once. What they do is they buy 100 contracts from 100 sellers. Then they buy 100 more contracts from 100 more sellers. And they do that 10 times until they could get 1,000 contracts, let's just say, so they don't want to show their real size. So in this period of consolidation, a lot of retail and a lot of traders start selling the market, stopping out for a loss, then resulting in liquidity to be picked up for these larger traders. Then the market rallies up, forming this level of market structure demand. And what I do here is then wait for a pullback into this market structure level of demand to then get long for the same buyers appear, where I then look to capitalize on a upside move. Now, you can kind of see these from candlestick charts, but for me personally, I like finding them on the heat map, on Bookmap, because again, things that really can't be seen on the chart are a little better for me and give me a little more conviction when I use order flow. So this setup, similarly, was a 3-to-1 risk to reward ratio. And I longed the market when it was pulling back into this level of market structure demand. And kind of from this chart, we can kind of see that, right? We can kind of see the drop right here. We can see the consolidation right here. And then we can see the move up. Let me redraw that. So we see the sell-off right here. We then see the consolidation. And then we see the rally up following that, right? Then this period of consolidation then becomes market structure demand, where I'll look for a pullback of the market into that. And for the buyers that were leveraging into a larger long position here to defend these prices, maybe reload, maybe get in a larger long position, and then capitalizing on a rally and capitalizing on the move up. So that's the whole premise of this market structure demand. Let's get into the setup. Again, it was about a 3-to-1 risk to reward ratio. So here we can see the market selling off. Here's the 9:30 open. Market sells off. Here's our drop. Here's our consolidation right here. You know, kind of forms like a W. It's kind of like a pattern that you know appears. Maybe we call this the W pattern from now on. And then the market lifts up and rallies from this. So now what becomes significant for me here is keeping an eye on 67.72 to 67.68. This is going to be an important level I want to watch in the short term to hold. If it does, the market may have the strength from buyers to rally into 67.80 to 67.82. You'll see where that level comes from. But ideally, this level just came from right here. Market structure demand from this consolidation range right here. We extend this to the right. Now the thesis here is just looking for a pullback into this. Any signs of buyers, looking to capitalize on these buyers to bring the market up from that. Now, combining this with what we talked about on the last playbook, now we see when we add a volume profile, we now see this the market structure demand right here. All right, so let me draw it on here. Here we see the market structure demand. And if we look at the volume profile, we see a low volume node. All right, we see the volume significantly lower. What this tells me is these concepts right here, combining both of these playbooks. Is here we see the market sell off, and then we have the consolidation range. Right? We could see traders stopping out. Look at the low at daybreak. Right? This was the market breaking under the low at day. All right, this is the low at daybreak. We can validate that traders stopped out right here because of the heightened selling volume as the market was breaking down. And that validates that a passive buyer or somebody leveraging into a position had the ability to buy here. Because if we see all of this selling volume, especially under a low a day, and then the market reverses from that and rallies up, especially forming a low volume node, this just validates and indicates to me that traders are stopping out. Traders are either then getting in short as well, which is another significant point to this, right? Because we see the selling volume, to then somebody who is buying passively and patiently this move down. On top of that, we can also just have this consolidation range. So when we combine that and then the reaction out of this stop out right here is that it forms a level of low volume. So the market then rallied, and because of all of this aggressive buying volume right here, it formed this low volume node. So we kind of just have, you see how there's a lot of different confluence and a lot of different things are aligning, showing that, all right, we don't see a significant rally just yet. I mean, from the low to the high here, it's 13 points. We don't see a significant rally just yet. But diving deeper and looking at the order flow, we see the low volume node. We see the aggressive buyers. We see the trap buyers at the low a day. We see the passive buyer down here. We see the stop hunt. We see the market structure demand. We see everything just aligning that, all right, as long as the market remains above this low volume node and the market structure level of demand, pullbacks into this should get bought up, and there's absolutely no way that I could be looking to, sell the market. Does this zone need to also align with higher time frame demand, or is this more of an intraday zone? So similarly to the low volume node strategy, if this aligns with an existing level of interest, it's even better. It just gives it more confluence. But for this strategy, it doesn't necessarily need to align with higher time frame levels of demand or levels of supply. That's a good question. This is kind of more of an intraday zone, but that's not to say if there was an existing level of demand, let's just say, we had the market coming into demand from the day prior, that just makes it even better. I guess you could say it gives it more confluence and more structure. What are my volume bubble settings? My volume bubble settings are all default. If I go here, go to volume.settings. If you're watching this after the fact, you could kind of go back and pause the video here. Mine are all default. Nothing's changed on my Bookmap. The only thing that I do change is I adjust the upper cutoff. I put it all the way to 100, and then what I do is I adjust it until the heat map moves one time. So watch, right? You'll see the heat map move once, right there. As soon as it changes once, that's what I leave it to. If I go here, to me, this is just noise. If I zoom in right here, I don't care about these orders. There's nothing significant on the order flow, or on the order book. There's 62 contracts right here, and it's highlighted in an orange line. There's 68 contracts right here, and it's highlighted in an orange line. To me, that's not significant. I want to see significant outliers or different data in the order flow. So then when I adjust the cutoff, all right, I go all the way to 100, and I adjust it one time until it changes right there. It removes that noise, and I only look. So, a perfect example. I care about this 700 lot bid that's sitting right here. Right? That's what I care about the most. I don't care about these 50 lots, 60 lots. I care about this 700 lot. And I care about, these orders down here that pulled, that never got filled. And I care about these guys right here, 1,000 contracts that pulled when the market got close. I don't care about the 50 lots, 60 lots. That's not significant. That's not an outlier in the order flow. All these playbooks and all these strategies are just looking for things that don't look normal or things that don't look natural in the market's auction, I guess you could say. Okay, let me add this replay. So the date of this setup was, hold on one second, guys. This was October 8th. Again, the beauty of this is I can go to my library right here and pull up October 8th. And I will be able to show you guys, once this loads up, exactly how it developed on October 8th. So we'll let that load. Going back to this market structure demand scenario is, all right, we see this market structure demand. We see this low volume node, right? So the idea and the thesis here is looking for a pullback into this. That if it pulls back into this, I would be looking for longs, just plain and simple. Now what we're going to see here is, here's our market structure demand. The low volume node started at like the 72s. So I guess we could just draw this as just one significant level of interest. And as it pulls back into this level of interest, market structure demand, low volume node, we also start seeing bids fill, right? We see passive buyers transacting and facilitating here. So as the market's pulling back into this, we see these passive buyers validating the buyers that we see right here, buying as the market's pulling back and essentially defending prices and supporting the market much more as it's pulling back. And let's pull up the replay here. Somebody asks, what time frame do I take my trades? This might sound confusing, but the time frame that I take my trades is what I call on the now. It's right now whenever I see the buying or the selling volume. It's not waiting for a 1 minute candlestick. In fact, I don't even need a candlestick chart to confirm my setups. It's, all right, I see this buying right here, I'm getting in long. Or, all right, the sellers are here, the offer's filling, trap sellers at the high, at the low, I'm getting in long. It's not waiting for the 5 minute chart to move up. It's not waiting for the market to sell off and break a low a day. It's as soon as I spot the volume, I'm getting in. And that's the time frame that I use. And I kind of call it the now. All right. So let's go to about 9:49. And we'll go right here. So right here we could see, all right, here's the sell-off. Here's the low at daybreak, and these even bids that fill at the low at day. We can see the aggressive selling volume and the bids filling at the low at day, just validating that stop hunt that we said earlier. And then the market rallies. On this rally, it forms this level of low volume as well. And then I will just now mark the just the zone in itself. Market structure demand, low volume node. Let's play this. Let's slow it down a little bit. Oh geez, I don't know what I'm doing here. Let's go none. Okay. Now I want you all to watch. Speed it up. I don't know the exact time. I guess we could see the exact time. It's like 9:47 or so, or 9:50. We're going to pull back and bids are going to start filling. So let's go back there. So watch this. This is on 8x speed. What's really cool about this replay too is that I can go negative speed. Not negative speed. I could go in a fourth of a second. And this thing will just move so slow. So you can really dissect and see, all the orders coming in. If I want to add a time in sales, look, I could do so. And it's really good to go back and, do all this. So, all right, here's the bid right there, 180 contracts. We're going to pull back into this. I'm going to go like 4x speed. The bid's going to fill right there. We see 317 contracts by 76, indicating that, all right, there's a passive buyer coming and stepping into the market here. Market's going to lift. Another 128 contracts just come into the market here. We'll speed it up even more. This bid fills, and watch, we're going to consolidate here, we're going to lift, and then you're going to see something really significant here. Okay, right here, 177 contracts come in. We're going to pull back into it. This bid's going to filled, and right here, I'm like, all right, this is good enough for me. It's not waiting for the market to lift. It's not waiting for it to move up. It's not, waiting for green bubbles to come in. It's, all right, somebody is buying on this move down, right? If I didn't explain all the existing points and we just have this right here, this is not significant to me in itself right here, right? Just a bid filling at this moment is not significant by itself, right? Because if we were to just look at it, right? I mean, we could look at all other levels earlier in the session, right? I mean, we could zoom in here to bids filling, to offers filling, right here. When you add the context and you add all the substance to it, that is what makes it confirmation and giving it much sweeter. So right here is good enough confirmation to get long, putting my stop under the 69s, right? And a lot of people always ask me, Carmine, how do you keep your stops so tight? Or how do you get a 3-to-1, 4-to-1, 5-to-1 risk to reward ratio? It's because when I spot something like this, I'm not hesitating to enter. Number one, it's my playbook, it's my system, it's my strategy. And number two, it offers the best risk to reward. I could get in right now with a 3-point stop loss and have a 10, 15-point target. So we'll play this. I think it pulls back one more time into this bid, maybe not. And then it rallies. If we wait right here, we're getting in way too late. Still a great entry, but I'd much rather get in, when these bids down here fill. And we're in down here, and we're capitalizing on this upside move. And that's the main concept and the main aspect of the strategy. I mean, if you zoom in, the bid fills, pulls back, low volume node, market structure demand, right? I mean, even if I were just to mark this market structure demand as something like this, you know, it's just a perfect bounce into it that offers the best risk to reward ratio. All right, now let's kind of combine everything even more. So this setup was a 4.1 realized risk to reward ratio. And if you look here, I mean, I don't want to say I sold early, and this is kind of a psychological thing too, is that at the end of the day, what we have control over is if we follow our plan. We can control our plan and we can control our risk and our emotions. Everything else is out of our control. We cannot control if we have a target, if the market's going to blow right past our target and you know have an insane rally or an insane drop. What we can control is do we follow our plan? And on this day last week, this was November 19th. Let me actually load this replay up and let it get started. November 19th. On this day, I got a lot of messages like, Carmine, you missed a lot of the move. And my answer was, no, I didn't miss the move. I got the move that I was expecting. I got the move that I was planning for, right? And looking at one setup and seeing the market, you know, keep going in the direction is going to have you thinking in your head, oh, I should have held runners, or oh, I missed out on this move, or oh, I should have done something differently because I could have made X amount more. At the end of the day is when we have a plan, we have to do everything to follow that plan. This trade was a 4-to-1 risk to reward ratio. Yes, if I kept holding, maybe I held some runners, maybe this would have been a 10-to-1 risk to reward ratio. Sure, it would have been more profits, yes. But we can't look at number one trade, and number two, look at where the market went after the fact. We got to look at, did we follow our plan? And on this setup, my plan was just targeting this 66.70 level. My plan wasn't going for this larger move. And if you try to do this over and over and go for larger moves and have the fear of missing out if the market keeps going in your direction, I will tell you right now with certainty that the market, you will confuse yourself, you will start emotionally trading, and you will start trading differently because of one setup where you want to tweak something and make more money because you missed out on potential profits over here. So always follow your plan because that's what you have control over. And no, I didn't miss the move. I got the move that I was wanting on this setup. I just want to make that a point because a lot of traders try to get every single penny or they try to squeeze every single drop out of the market. And I'm telling you guys, that will be a recipe for disaster doing it over and over again. Our job is to not extract every dollar out of the market. Our job is to not buy at the lowest price and sell at the highest price. Is it possible? Sure. But our goal is repeating the trading setups over and over and following our plan while managing our risk and keeping our emotions out of it completely as much as possible. So on this setup, what we're going to see here is I get long at like the 54s. I target the 70s, and I put my stop loss under the 50s. So it's about 4 points of risk for a 16-point reward, giving me that 4-to-1 risk to reward ratio. And I'm long in the pullback here, selling into the strength. So let's break down the setup. So right here, the market had a level of demand from the day prior, and we've bounced off of it in the overnight session. Unfortunately, we did not bounce off of it in the intraday session at the 9:30 open, but we did bounce off of it at the overnight session and these buyers that are present here. And look at this. I mean, the concept that I just explained about market structure demand, I mean, even look at this, right? We have our drop here. We have our consolidation here, and then we have our rally. So, I mean, this just even validates that, all right, this is market structure demand right here. You know, we bounced at it intraday, bounced at it overnight, bounced at it again overnight. So, it's just the concepts are just applied no matter the time frame. So, on this day, the market was holding demand. And this is going to go back to point number one of the low volume node strategy. And again, it's not like the market's never going to be perfect. Sometimes we'll miss levels. Sometimes we'll have a demand zone in this example, let's just say, and we don't get to capitalize on it because it happened in the overnight session, or maybe we didn't see confirmation on it, or maybe it rejected supply and we weren't at our desk at the time. Well, guess what? We can use this as a piece of context or a piece of the puzzle to put together that the market's telling us that says, hey, you know, buyers are here. Buyers are supporting the market. We know buyers are factored into the market. So with this, and obviously missing this happened at 1 a.m. overnight. When the market opened, my game plan was absolutely no shorting the market under this trading above this level of demand. So because we bounced at it, there was absolutely no way that if the market sold off, I'm shorting the sell-off. In fact, I'm using it as a thesis to long every dip possible above this level of demand. So that's point number one is we bounced off this level of demand. I used it as context and I said, all right, I have to be bullish above this level of demand and I have to be long in pullbacks and buying dips. Then the market rallies. Here's our 9:30 open. Right, we have the market rallying up, and I want you all to watch the structure of the volume profile right here. So as it's lifting up, right, and again, like, this is why context is important, because what I think a lot of traders do, and it's normal to do this, is that they see, oh, a green bubble, they're longing it. Or they see, oh, a green bubble, no follow through, I'm shorting it. Or they see larger offers appear here, and they're like, all right, I'm shorting this. Sure, if that's a strategy you've built, excellent. But this provides context, this provides confirmation, this provides information that I can put the story to the market together. When you add the context and you add the substance, it just makes it even better. So here on the market's rally, we see a significant level of low volume. I guess you could call this a low volume node. I would just call this just like a volume shelf, or like just significantly lower volume. And this formed because of this move up right here, was so violent, was so aggressive that the market did not spend much time there and it did not transact much volume there. So my idea, my thesis here was looking to long a pullback into this. If it could hold, I would then target upside levels. Now what I did here was I also combined this, and where I drew it down to the 45s, if you look at the level, it was 66.52 to 66.45. And again, like, these are all trades that I've taken. I never talk about setups of things that I've never talked about in my community or trades that I've never taken personally. With every trade that I take, at least all the good ones are ones that are based off my system and based off my playbooks. I'll never go over a trade that I did not take or didn't plan for in my community. So here we have the 52s. Right, that's the start of this area of low volume, and I drew it to the 45s, which is just this level of consolidation right here. Right, the market rallied, consolidated, and then rallied. So to me, this looked like a potential buyer in the market. Also, there's a delta outlier. We could see that on the large green volume bubble, and just a period of consolidation. Again, for traders looking to buy, they need others to sell. For others to sell, they need others to buy. In this example, this pullback right here, we could see the significant selling volume holding on an uptrending market on a pullback. To me, that's a sign of a passive buyer. So combining this structure right here of consolidation or a passive buyer, along with this area of significantly low volume, this now becomes my level of interest at 66.52 to 66.45, where I'm looking to long a pullback, targeting those upside levels. Now, right here, we can see the pullback into this. And I get long on this pullback right here, and all I was doing was targeting the pre-market high at 66.70. Right, so my thesis was, let's long the pullback. If these buyers who are transacting here in this morning rally have the strength to continue to rally the market, this could be a good sign that the market will then go take out these pre-market highs. Again, I'm mainly targeting or going for just quick moves where I know the market could likely gravitate towards in that next move directly after I enter. A lot of the setups that I take, and I'm not going to say all of them, have very minimal drawdown and move in my direction quite quickly after I enter. That's based on the confirmations that I'm looking for. I'm looking for just quick moves like this. So basically long the 54s, put my stop under the 50s, and the 50s was this low that it made right here on that consolidation range. Targeting the 70s, that's where 16 points of reward for a 4-point risk came from, because I knew if those buyers had the strength, there was nothing stopping the market from then rallying up and breaking that pre-market high. It's ideally, I'm looking for levels where the market would have an easier time gravitating towards or breaking through once I've confirmed the strength from those buyers or from those sellers. And pulling up this replay right here, Let's slow it down. Let's go to about 937. For anybody watching this that is in the Invest to Trade community, if you go to the Bookmap tab in there, all the replay files from the past few months are in there if you do have Bookmap and maybe you missed a day. It's just such a good tool. I know I keep saying it, to just go back and reverse engineer. It really is. Like I attribute this replay and dissecting my data and going back and reviewing and replaying and simulating and reverse engineering to a lot of my playbook development and knowing the patterns that I'm looking for. And I attribute a lot of it to the patterns that I look for on a daily basis. So zooming out right here, you can see the volume shelf at the 52s, right? You see this level of just significantly lower volume. And then right here, you see that pullback into those like 66.51s to like those 45s. So this just becomes a significant level of interest. Do I only take longs above the VWAP and shorts below VWAP? No, I don't really look at that, to be honest with you. Maybe that's a good thing to test. I don't look at that. Does it make sense to check the 1 minute chart on the volume as well as take entries on Bookmap? You could do that. I don't. You could do that. The volume is volume. Volume you see on a 1 minute chart to volume you see on a 30-minute chart is going to be the same. You know, volume for this session is not dependent on a time frame. Does Bookmap automatically reset SVP to New York Open? So what I did here is my RTH column. If I right click this, all this is a session accumulated volume profile. And what I do is I go to reset configuration, and then I reset it at the 9:30 market open, the New York Open. So all this RTH column is just the SVP that resets at market open. So volume shelf, consolidation, and watch what's going to happen here is the market's going to pull back into this. Speed it up a little bit. What happened right there? It pulled back into this. And then as soon as the market breaks above this, where is it? A horizontal line. Consolidation range, especially with this bid down here filling and this little stop run or stop hunt, I get long. Do I have a system with Bookmap? I mean, yeah, everything you're seeing right here is a system with Bookmap. I would definitely recommend checking out my YouTube channel for that. A lot of free resources there. And then the market just keeps rallying. And then hits our 70 target. Right, so all that was the pullback into that, stop under these lows, targeting the 70s. Now, next setup. This was a 3-to-1 risk to reward ratio. We see the market selling off into an existing level of demand. All right, so we have an existing level of demand here. And similarly to the last example, I mean, I sold here. And look what the market went after. Right? So, I mean, still selling pretty much prematurely. This was what my plan was for. But it could have been even a better trade if I kept holding. And no, I'm not mad that I didn't keep holding. Because this was a 3-to-1 risk to reward ratio that lasted 2 minutes. I mean, this trade took me 2 minutes. 2 or 3 minutes in duration this trade took. And let's break it down. So here we have our level of demand. This was around 68.56, let's just call it. What time frame do you mark low a day, high a day? Low a day, high a day is going to be the same time frame. You could look at it at a daily chart. You could look at it at a 1 minute chart, 5 minute chart. It doesn't matter. High a day, low a day is going to be the same regardless of time frame. Every low volume node could be possible entry. Yeah, kind of. The Discord and Carmine's Invest to Trade course is great. It is excellent. I appreciate that, Riverside. Okay. Have I ever used stop and iceberg indicator? I'm going to be honest. The only indicator that I use on Bookmap is the depth of market. I don't even know if that's considered an indicator. All right, so here we see the sell-off. 68.56 is our level of demand. 3-to-1 risk to reward ratio. Market selling off into this pretty aggressive sell-off, right? And on this sell-off, specifically here, where I'm going to highlight right now, we form something that I call a zero print. What a zero print looks like is there's zero volume on one side of the market. We can see it at 68.62. And when this forms, the market has a very high likelihood of revisiting and gravitating back towards that. Now the market sells off, and this is not the clearest market structure demand, but again, the concepts and understanding the structure of this is what's significant. Here we see the sell-off, and here we see a potential level of consolidation. I will argue and say that this isn't the clearest market structure demand, but this is potentially forming. And whoever asked me earlier, does higher time frame market structure have to align with this? No, but here's a good example of it doing so and kind of giving it more substance and more confluence. So here we have our market structure demand, and then here we have the pullback into this market structure demand. And what's important here is we start seeing a passive buyer then support the market. Now, we don't see a passive buyer in the sense of a large passive bid. We see a passive buyer quietly bidding to passive or to aggressive sellers who are then selling to this passive buyer. On top of this, we had the zero print at 68.69. Let me load up this file so we have it here. This was November 3rd, and let this load. So here we have, what data feed do I use? I use Rhythmic. Market structure demand, right? We have the zero print on the sell-off at the 62s. We're at demand. So let's just go back, take a step back here. On the sell-off, the market formed a zero print. On the sell-off, the market is stalling at this level of demand. That's two things right there. On the sell-off, the market is now forming market structure demand. That's three things. On the sell-off, we have a passive buyer. It's four things right there. So four things now indicating buyers are possibly present at this level. Passive buyers, zero print, market structure demand, old existing level of demand that formed from the day prior. The market's going to bounce here, it's going to rally, and it's going to go fill this zero print. And these were the confluences for me to take the market long at this level of demand right here, targeting just the zero print. You know, it filled it in 3 minutes. And let's kind of go back and simulate this. So let's go. The zero print forms around 1020. So let's go to about 1020. We're going to see the sell-off right here, and keep an eye on 68.62. We have the valid zero print that formed right here, 68.62. So now what I'm going to do is as soon as they form, I mark these as levels of interest. Horizontal line, 68.62. Let's go none. Okay. Keep in mind, demand is at 68.55. That's where demand is at, 68.55. Let's play this. Let's slow it down a little bit. And then you're going to start seeing the market structure demand form. So here we have our drop. Right. And then here we have the market rallying. And now we're going to see here's a pullback. And on this pullback, we're going to see signs of a passive buyer bidding. Right there, one. Let's go back to that. 1035. 1035. Let's go right here. Okay, right here. Ready? I'll slow it down for you guys. Let's go 2x speed. I remember I asked you to add this bookmap file feature to the Invest to Trade Academy, and you responded immediately. Yeah, for sure. It's a good resource. So watch this bid fill right here. Not a significant bid, but there was some significant selling volume. Watch. And keep in mind, all the points that I'm explaining right there. So a lot of selling volume just came in right there. And the market lifts. It's going to happen again a few minutes from now. Right? So, I mean, I guess you could say, yeah, there's a bid that filled there, but there was just a lot of selling volume. We're going to pull back again. And you're going to see the same thing right here. Immediately get bought up. To me, this is great confirmation right now. You know, if I didn't get long on the first one, if I didn't get long on the second one, right now is great confirmation to get in long. With those 4 points, remember, if those 4 points weren't there, this is not good enough for me, right? But those 4 points give it context, right? The main way that I'm using Bookmap is for confirmation. It's giving me the indication that buyers or sellers are present and active at my level or wherever I'm looking to transact at. And the market pulls back and holds it 2 times. Right now is great confirmation to get in long, putting my stop loss under where that first buyer initiated. That would have been about 3 points of risk for, depending on our entry, to go fill the zero print at the 62s. And watch, you're going to see it go fill those 62s. And then the zero print filled. And we use that as a magnet. And then the market continues to rally. And maybe I should have held runner, sure. But that was the main premise of this setup. And I think I got one more setup. November 21st. If you've seen my most recent YouTube video, I talk about this in my most recent YouTube video. So this was a 5-to-1 risk to reward ratio. Really good trade. And there's an important concept that I want to explain here. Order flow enables me to get very good risk to reward ratios. So what we're going to see is a balanced market. In balanced markets, I look to fade the extremes. I look to buy the lows and sell the highs. In balanced markets, it's not proper for me to go for continuation. It's not proper for me to expect a larger move. I look for mainly reversals in balanced markets. Here we can see a clear balanced market, and even over here we could see one. Now what we're going to see here is in the Discord, my main plan was watching 65.75. If we can break this level but not below 65.65, I want to be looking for longs targeting 65.95, which was just the break of the high of the balance range. Good targets when trading in balance is the upper extreme or the lower extreme. So what we're going to see here is the market's going to pull back into 65.75, and you're going to see 2 times I get long. But I want to show you where 65.75 came from. This came from some delta outliers. This was from the session prior, what I'm showing to you right now. The session prior, we see 1,092 contracts hit the bid at 65.75. 1,600 total on the full session. A few minutes later, same thing. We see 613 more contracts come in, giving us now 2,200 contracts which hit the bid that day. But what's important here is that, yeah, 22 contracts is not a lot, but only 500 hit the offer, giving us a negative delta of minus 1.7K. Or, minus 1.7K negative delta at that specific price. So 65.75 from the previous session became a significant level of interest. And I'll just show the footprint to just show this a lot better as well. Here we can see the negative delta on the footprint, another one, and another one. And the following session, why I was watching 65.75 was because of this action from the day before. On top of that, we see 65.75 present the same delta outlier, the same aggressive selling on the next day or the session that I traded it. Now what we're going to see here is the market's going to break those 75s according to my plan, and I actually get long down here at the 75s when it breaks it. Again, on balanced markets, I'm looking to buy the low and sell the high. So I get long when those 75s break according to my plan. We were watching the break under the 75s. If it holds, looking to get long. Breaks those 75s, it breaks above this little structure right here, and I got long, I'm not going to lie, a little higher than I would liked at these 78s right here. I do regret, not getting long, let's just say here. I did get long a little higher. So I put my stop loss into the 74s. It was about 4 points of risk for a 17, 18 point reward to the upside. Still a 4-to-1 risk to reward ratio. And here you can see that 65.75 again, the delta outlier on the day session, minus 1,300 contracts. So as soon as it broke above this, we could even call this market structure demand too. I was up over 3R. I mean, this thing went up to the 65.92s. My entries right here went to the 92s. I was up 14 points on 4 points of risk. I was up over a 3R. My target was a break of this high right here. Unfortunately, did not hit it, and I stopped out of this trade for break even. If I go up 3R in 2 minutes, there's no way I'm letting that trade go to my original stop loss. It's just one of my trade management techniques that I implement. So it stopped me out for break even. A few minutes later, I re-enter this setup, and looking at this chart, right, I get long here. Is there anything that looks super bullish or super strong from this chart right here? I can't see anything, you know, and this is why order flow is superior. On top of that, we wouldn't even have known 65.75 was a key level if it wasn't for reading deeper into the order flow and understanding that there was a massive delta outlier there. So after I got out of that first long for break even, I re-entered again down here at the 65.72s. I got long at the 65.70s. I put my stop loss under 65.65, so 5 points of risk. And now this was a 25-point reward. This was a 5-to-1 risk to reward ratio. And what we're going to see here was there was a passive buyer sitting at 65.70. With the context that I've explained, this made it more significant. And just zooming out on this Bookmap chart, you can see this large red sell bubble right here. And I want to zoom in so we can kind of see what was getting transacted there. Zooming in, look at all this selling volume right here, getting absorbed by this passive buyer. Right, we see this large red line indicating a large, thicker bid, filling, passive buyer filling, following our plan, right? The plan that I posted in the Discord this day was looking for a break under the 75s to get long, targeting the 95s. That was the plan this day. When it broke under the 75s, we see this significant buying activity. So my thesis here was, all right, let me get long when I see this. Let me put my stop loss under the low that formed here at the 65s. Let me then go target the high of the session at the 95s. And following that passive buyer that filled here at the 70s, following this guy, the market also held the 75s as support once, twice, 3 times, even like 4 times. So it held it multiple times thereafter, supporting those 75s. And again, we really can't see this on the candlestick chart. And that's me getting in when I see this. It's not me waiting for the market to rally, right? The big difference in how I trade, maybe compared to a lot of others, is that when I see something, I'm getting in. I'm not thinking, oh, is this going to work? I'm not thinking, is this the right way to think? I'm not thinking at all. When I see a pattern, I'm ready to attack. And I know I cannot control if the market's going to move with or against me. But when I spot something that appears in the form of a pattern, right? I have many different patterns and playbooks that I look for. This is just, 2 of them that I'm explaining. When I see something, I'm acting in that moment. It's not me hesitating or questioning my strategy. And it's just having confidence, conviction in your strategy. Let's go back to the bid filling. So here's the break under the level. Okay, it was right here. So let's go to 950. Okay. Oh, that happened fast. All right, so watch what's going to happen here. Keep in mind the context of this. This in itself is not significant. But when we add everything that I've been explaining so far, it makes it that much more significant. So watch, the market's going to lift here. And I'm going to slow it down. I'm on 4x speed right now. Watch this bid appear. Watch, it's going to happen right here very fast. The market's going to move above the 70s. The bid is going to appear. The selling is going to hit that bid. And the buyer then supports it. I'm going to try to pause it when I see it. Just bear with me. Okay, right there. 486 contracts on the bid. Watch, I'm going to go to 1x. I'll go to half speed. I'm on half speed. Watch the selling volume come in and filling this bid. Look at all that selling volume coming in. When I see something like this with the context that I've been explaining, is excellent for me to enter and put my stop loss under these 65s. And that was the basis of this one. And then speeding it up, it rallies up. And keep in mind, the market's balanced, right? So I'm not going for a larger move. I'm just going for a break of the highs at the 90. Not even the highs. I'm going for a break of this balance range high, essentially, is what I like calling it. And then here's the support of the 75s. Look at that. It supported it like once, twice, 3 times, 4 times, right at 65.75, where that large delta outlier was from the day prior. And then the market rallies and, hits my target at the 95s, and I get out of this trade. And that was the basis for this setup. Again, a 5-to-1 risk to reward ratio. And that's all I got for you guys today. And that is it. Anybody have any questions? Any questions? I'm checking in the Discord and I'm checking on YouTube. Did that make sense? Did you guys learn anything from this lesson? Did that make any sense? Things you're going to add to your playbook, things you're going to test out. If you are in the Invest to Trade community, check out the Bookmap tab in the Discord because I have all the files in there available for replay for those who are in Invest to Trade. Somebody asked, if the overnight session and CVD indicates bullish stance and you hit a level of supply, some absorption is also seen. How would I get confidence to short? In that instance, that's a good question. What I would then want to do is not participate, let's just say in the first sell-off. I would wait for maybe the market to sell off, right? So, looking at my screen right here, let's say we had supply right here. I would wait for the market to sell off, and then maybe on this sell-off right here, it forms like a low volume node or something. Instead of looking to sell at the high of the supply zone, I then would maybe look to sell on a retest of the sellers that caused the market to sell off from the level of supply, and that would be like right here. On my YouTube, do I have my settings for Bookmap? I do. On my YouTube, I have a Bookmap settings video. How do I identify the market was balanced? All you got to do is you could look at it on a 1-minute chart, 5-minute chart, 30-minute chart. It's ranging, it's moving sideways, and it's lacking direction. How do I align delta footprint and heat map? I don't have my footprint up right now, but if you see a large delta bubble, or a large bubble, right? Like you see one right here, on the footprint, you're going to see the same information. The volume and the data is the same. It's just a different visual between Bookmap and a footprint chart, let's just say. Why trading on the S&P 500? Have I tried another pair like gold? The way I look at the market is that I have an edge. I have something that works, and maybe I'm missing out on other opportunities trading other names. But when you have something that works, you never fix it. You adjust and adapt to it. But when something's not broken, you don't fix it. You keep doing it and over because it's repeatable, right? Any chance I'd give a major discount for Bookmap members to join the Invest to Trade community? Listen, there's so much value and so much education in there. It's already significantly discounted for everything that's offered. When I recap my trade, how do I review? When I'm recapping trades, win or loss, I'll just go back and see if I missed something. I'll see if I had a good confirmation. I'll just dissect it. All the answers lie in the data. I take a sell on a retest. Yeah, for sure. I would take a retest if I'm kind of going against the strength. When I reset the SVP to cash open. Yeah, so I have 3 profiles on here. I have CVP. I have RTH, which all it is a session accumulated that resets at market open. And then I have an SVP that accounts for the overnight session as well. Master Chief. How many of my setups do I find on Bookmap? My setups you can find them anywhere, anywhere reading the order flow, right? All it is just a visual and pattern recognition. That's all the way I look at Bookmap. How do I align delta footprint? I answered that. Do I only take trades in supply and demand levels? No, not necessarily. Do I use volume profile to mark up levels like value area high and low? I do not. I don't really look at like point of control and stuff like that. W webinar. You will enjoy and invest to trade. Do all my entry signals come from Bookmap? Not all of them, but I always use footprint and Bookmap. I have specific patterns that I look for on Bookmap, and I have specific patterns that I look for on the footprint. My decision to choose Invest to Trade 2.5 years ago was the best decision I've ever made in my trading career. Awesome, Captain Future. What add-ons do I use? I really don't use any. I use the depth of market. Do I provide live trading for those who are in the Discord? My live trading is done through text commentary. You know, I'll type out what I'm watching, why I'm watching it, and how I'm watching it. There's no like screen share or voice chat. I found that to be a little distracting. All my commentary of my live trading is done through text commentary. Tons of lessons, tons of levels and scenarios. Cool. Alrighty, let me see on the Discord. When I wish the position for buy, when exactly you time your entry? Yeah, as soon as I see like absorption, for example, I'll get in as soon as I see it. Can I explain the way I look at low volume? I did, Jorge, in this webinar. Alrighty, guys, I think that's gonna be it for me. Enjoy the weekend. Enjoy the time off. It was a nice little half day today. I didn't trade. Enjoy, everybody. Hope you all learned something from this. If you did, check out the links in the description of this webinar to follow me on my socials as well. Enjoy, all right? Bruce and Dan, can I end it or no?
Yeah. Thank you so much, Carmine. Excellent. Lots of great
lessons there. And we've got it recorded for you in YouTube, and so people can come visit. And I posted a lot of your older webinars in there as well.